what it's like. You go to the fish and chip shop and you get a tip on a stock. You go to the bank, or even better, you go to a stockbroker and they say, you know what I've heard? I think you should buy XYZ company. Well, traditional insider trading is the trading of a listed company stock by an individual with access to information that's not in the public domain. That's version 2.0. It's the siphoning of public releases with market-sensitive corporate data that can be used to make profitable trades. This is the Moneymakers. I'm Bruce Whitfield. Tonight we speak to Max Gebhardt. He's the Managing Director of strategic communications consulting firm FTI about how to handle sensitive data, because the newest trend is that hackers are breaking into the news wires that have got time-sensitive information to get hold of that information to make a profit. It is, forgive me, the maxing, Max, of access to information.
Absolutely. I mean, in this day and age of automated trading, every second counts. So if you can be 5, 10, 30 seconds ahead of the rest of the market, you can make significant gains.
You've worked on many sides of the fence. They're not just two sides to the fence. You worked in public relations, you worked in investor relations, you worked as a journalist in media as well, and you understand the dynamics of market-sensitive information. What are the rules, JSE rules, in terms of how information should be disclosed?
Well, first has to go through SENS. So that's they're supposed to be the distributor of all market-sensitive information. So it starts there first. But of course, there are many hands that touch that information before it gets to SENS. So there are many places where that information can leak out. So you've got to make sure that you've got very robust systems in place to make sure that market-sensitive information is not put into the market before the rest of the market knows that.
I mean, the purpose, I think the close period is, what, 6 weeks before the announcement, a significant announcement of results? I think it's, call it 6 weeks, it's in there or thereabouts, whereby information may not be put into the public domain, where executives are told price-sensitive information may not be put into the domain, where executives suddenly clam up and don't want to talk about anything to do with the weather or anything else for fear of being accused of releasing price-sensitive information. That then the finance department of a company will go through the numbers and they'll start crunching those numbers. The trends will start emerging, and that's, I suppose, where the vulnerability starts.
Absolutely. And then, of course, you know, it's that pull effect. The ripple just starts getting bigger and bigger. So you can start with your CFO, and then it's his finance managers, and then they start bringing in all the other people, your corporate affairs or corporate communications department, because now you've got to put together presentations. And so there are many places where that information can leak out. And as I said earlier, I think you have to have very robust systems in place, because you now start sharing that information across networks, you're emailing it.
Because suddenly somebody decides, I should email this information now to the public relations firm or to the investor relations firm that we've outsourced to. So PDF, and boom, off you go. It then goes into a brand new domain over which you have no direct control.
Absolutely. I mean, your corporate advisors, you just think of all the people that actually have that information. And yes, I mean, I think, look, what we certainly do on our side as an organization is we make sure that all the information we deal with is encrypted. But even that is not enough, because, I mean, it is flowing across somebody's data network. You don't know what they do with their laptop. They go out for a dinner, the laptop's stolen, lost, for whatever might happen to it.
This is beginning to sound a little bit James Bondish. I mean, is it really that important? Is this information so absolutely crucial that it deserves to be treated in the same way as Jacob Zuma would like the Nkandla documents to be treated?
Yes, absolutely, because we are talking here potentially, as I said, I mean, in this day and age, millions, multi-millions that can be made. And it's not just buying the stock, it's buying the options on the stock, because those are where the big movements take place. The options give you the ability to really leverage yourself. So, you know, in the past you could have bought, say, 100,000 shares and the share price moved 5 or 6%. So yes, that's still a very good gain. But these days on an option, that option could move 100%.
In the South African market, it's kind of easy to spot the insider trading issues. We see share prices move days before an announcement comes out, and you go, okay, something stinks. And Peter Redmond upstairs here at the JSE takes out his magnifying glass and goes through the trades and looks for suspicious patterns. It's kind of easy, I would argue, in a market with probably 100 shares that are traded very actively on a regular basis. It becomes a lot more complicated when you're looking at the S&P 500, when you're looking at the Dow, and you're looking at the thousands of companies that operate in the United States, the hundreds that operate in the United Kingdom, across the European stock exchanges and into Asia. Suddenly we're talking about billions of transactions every single day. Information can disappear into that noise, can't it?
It can, but invariably they've got very sophisticated tracking mechanisms. So I don't think people should think they can game the system and they'll somehow not be noticed, because they do tend to track and look at algorithms. It's a wonderful thing. That's basically what is looking after all these things. So this latest case where we saw with PR Newswire, they didn't spot it, but somebody spilt the beans. And that's always the danger. You might think that you're safe, but...
And then the story there is somebody hacked into the PR Newswire service. It's the United Kingdom equivalent of what used to be the South African Press Association in South Africa. They've got a Newswire service. Stuff is embargoed. Somebody gets into a mainframe there through the back door. You can be sitting anywhere in the world, courtesy of technology, and getting access to that information. That information is worth as much as a bank transfer.
Absolutely. And I mean, interesting in that case, the actual people who stole the information didn't actually trade on it. They then sold that information to other people who traded on it. So, you know, absolutely. And it shows you just how much that information actually is worth. It can actually become a tradable commodity in its own right.
In the olden days, insider trading was a bit of a mom and pop thing where you happened to know the finance director of XYZ company who dropped some information at a bribe as a favour. Monday morning, just before the results came out on Tuesday, you went and bought yourself 100 shares as a bit of a punt, and you made yourself a tidy profit over 2 weeks, and nobody would ever have noticed. On the global scale, just how big is the problem?
I don't know if there are any accurate numbers around it, but I mean, I think it is an issue. I mean, just these latest cases that we've seen, we've talked about in the tens of millions of US dollars in insider information. But I mean, I certainly know research that we did at FTI said that directors, 40% of all directors say cybercrime and cyber fraud is their biggest concern. So if 40% of directors are worried about this on a daily basis, then you can imagine it is actually a pretty big problem.
And we're going into the world of the Internet of Things. I was talking to a cybercrime expert the other day saying, you know what, you are increasingly vulnerable because you put up the iron curtain around your office network, and then everybody then uses the office Wi-Fi on their private devices to upload to their latest iOS 8 or whatever it might be, and suddenly is downloading information. Machines are talking to each other. People take information home on these devices unknowingly, and there are lots of avenues whereby cyber criminals are just testing the whole time. They don't know what they're going to get. They don't know. Then if only 0.1% of their hits ever land, they're making money.
Absolutely, and I think what we're seeing now is with insider trading, it's going into the world of cybercrime. It is about doing exactly that, testing companies' IT networks to see how robust they are, and if they're not robust, extracting that information and using it for various purposes. It might not, as I said, be just insider trading. It might be the selling of that information. It's also often could be a case of blackmailing the organization. So it is quite a worrying thought.
That's on the global scale, of course. Yeah. In South Africa, we sit here as pimples on the backside of global markets, and we don't particularly feature in the global economy. We've got a very good stock exchange. We've got a very effective and well-regulated financial market. Do people get away with more here, do you think? What does your FTI research tell you about the level of insider trading in the South African market?
No, look, I mean, I think the JSE's done a very, very good job on that front. But, you know, don't forget that, 50% of the JSE is in foreign hands. So, you know, I mean, what sort of information is trading there? You know, we could say perhaps in the South African market things are fine, but we don't know what information perhaps is leaking overseas that we don't, and those individuals are trading on it. So
we've come a long way, haven't we, from the days of data tech, and was it a nod or a wink or a cough or a splutter or whatever it was Jens Montanaro may have made in a meeting with an analyst. The analyst told the trading desk, and the trading desk acted on the information. What are the rules in terms of you become privy to a piece of information that you shouldn't be privy to? For a lot of people, the temptation is, no one will ever know. I'll just do a little bit.
I think the rule of thumb is if you don't want to see it on a billboard, don't say it. You know? So yes, I mean, and it's tempting. I mean, it's, you know, you go home, you talk to your wife, your husband, and you say, oh, by the way, you know, we're working on this deal, or this company's doing this thing, and they can go and tell somebody else. That by itself could constitute the fact that you're partaking in insider trading. So I think the simple rule, as I said, just don't.
I mean, I know a couple, for example, who worked in competing investment banks who were forbidden by their companies to take their laptops home, which is a great excuse to not do any work at home. I don't know how often they see each other, based on the fact that, you know, they have to stay at the office late at night because no work can be taken home, precisely for that reason, whereby pillow talk is costly.
Absolutely, yes.
So Max, I mean, we look at the world of insider trading. Things have moved on considerably. The world of technology has moved on and certainly is becoming integral. How then do you do the governance process internally at a business like yours, where you've got 30, 40 people working within the confines in an office space? There's some agencies that sometimes work for competitors and swear that the Chinese walls are solid. It's a delicate and difficult balancing act.
Absolutely it is. And I mean, we all like to say that we have Chinese walls in place, but they are as porous as a human individual, I guess, in terms of what they give out in information. But I mean, for us as an organization, we do try to put in place systems like making sure that the teams working on an account don't interact with teams working on perhaps a competitor account. We make sure that all information that we trade across our networks, as I said, is encrypted, so password encrypted. But again, our systems are only as safe as the people who operate them.
But that is ultimately the point, is that actually do we have a technology problem or do we have a people problem when it comes to the issues of insider trading?
It's a bit of both, but I mean, I think it's a people problem and making sure, I mean, if we talked about that PR Newswire story, my understanding was they didn't have the right level of encryption. But what is the right level of encryption? Because every time you seem to be ahead of the game, the
baddies
crooks,
catch up,
catch up and go ahead. So
it is a case of closing the barn doors after the horse has bolted in many cases. Max Gebhardt, the managing director of the strategic communications company FTI Consulting, on the way in which they deal with sensitive information. For you and me, it may seem harmless if you pick up a snippet of information at a braai, but if you ever get a call from a man called Peter Redmond at the JSE who sounds a bit cross, you better fess up, because insider trading is a criminal offence. There have not been many criminal prosecutions in South Africa, but certainly there are investigations from time to time where things just look a little bit too good to be true as share prices rally up 5 or 10% as they sometimes do, surprisingly just a day or two ahead of big announcements. There'll be more ways to keep your money safe and out of the hands of cyber criminals tomorrow. Till then, goodbye.